Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. In today's weekend I have checked different currencies across the board and just for updating my view on different currency pairs and searching for something interesting, and in fact almost every major currency pair has some interesting for trading. That stands about the Euro currency, Australian dollar, New Zealand dollar, Japanese yen, and so on. But still, the most valuable setup now is developing on the Japanese yen. Today's video research and weekly research I have decided to dedicate to this pair. And since we have taken the last view on the Japanese yen somewhere in December of the previous year, I think that's time has come to update this view, because in general the Japanese yen shows the behavior that stands in a row with our analysis, especially of the monthly and weekly time frame charts that we have discussed in December. And market significantly has moved forward in the development of these setups, and these setups need to be updated. That's why today we will speak about the Japanese yen. But before we will start, I call you to read the weekly research, because the core, the basis of the analysis, stands on the higher time frames chart. On the daily time frame chart that we will discuss right now, we will speak only about some tactical moments of possible entry of trading, where the trade could start, and so on. But the context for trading, the reason why we think so in this way but not in the other way, all these reasons stand on the higher time frames. And from that standpoint, it's better to read the weekly research of the monthly, at least in the monthly and on the weekly time frame charts. So you will see the larger picture, and you will see what we could expect and why we suggest to make such trades that we will discuss right now. So let's start from the daily time frame chart. In fact, on the daily time frame chart, this development is bearish engulfing pattern on the monthly time frame. So if you will take a look at the monthly chart, you'll see that this action looks like the completed bearish engulfing, and that will be our reason and context for trading in a long-term perspective. But meantime, currently we could say that it's almost the rule of thumb that when the market shows some engulfing pattern, usually it shows some minor bounce inside of the body of the pattern right after it has been completed. And on the coming week we will trade particularly this bounce up. Although on the monthly time frame chart this bounce could look as a minor one, on the lower time frame charts, on the weekly, on the daily time frame chart, this bounce up will be really valuable and is worth of our attention. The second moment is that on the weekly time frame we have the setup for trading of the bread and butter trade by Judge Napoli. And market has accomplished the necessary conditions. We have the thrust up and reaching of the significant fib support area. Also take a look that on the daily time frame chart, that is also the agreement, so ABC top, and 100% extension stands right here. But at the same time we see that this development to the downside was really fast. So CD leg looks much faster. In fact, market has reached this area within the 2 trading sessions. It has hit the daily fib support, daily oversold. ABCD target shows minor retracement, and on the previous week has continued move to the downside. At the same time, the weekly bread and butter setup suggests that price still has one more reserve day for downward action. It means that the brain body context will not be vanished if market will show another day of the downward action. It means that the brain body could start not from that area, but it could start from a bit lower level. And I suggest that this could happen from somewhere from this area. That will be the area around the 50% support. That is also monthly pivot support 1 of the February. That's new monthly pivot points. 1618 extension of that ABCD pattern, daily oversold, and take a look. That is also natural support resistance. So resistance, resistance, resistance is broken up. This will be support. So that's really valuable and significant level when the market could start to move up. And I suggest that the chances that market still will show some deeper move before any bounce up will start is really significant. On the 4-hour time frame chart, you'll see that some patterns suggest the same action. So although we have this nicely looking bullish divergence with the MACD, at the same time we have the butterfly. 1618 target of this pattern stands at 170 approximately. Okay. While on the daily time frame chart, this area stands at 168. That's weekly pivot, monthly pivot support 1. So you can see this area and the target of this pattern stands in the same range, the same level. But on the 4-hour time frame chart, it's a bit tricky situation, since here we could get not just a butterfly, but also market could form, for example, the 3-drive buy pattern, because you can see that this could be the first drive, that is the second, and take a look that the 127 extension of the first drive coincides with the 1618 extension of the second drive. And that is a very typical combination for the 3-drive pattern. Both of them stand right at the weekly pivot support point, and this is approximately 101.21 on 101.40 area, slightly higher than this one, so 30 pips higher. Since we do not know exactly what pattern will dominate and will turn market, the reasonable solution for this riddle could come from applying of the scale-in tactic. It means that when the market will hit the target of the 3-drive pattern, you can take, for instance, 30% of your usual position and just wait what will happen. If market will continue to move lower, in this case, the rest of the position you should take somewhere in an area between 160, 170 area. Stop should be placed somewhere below the weekly monthly pivot support and below the daily oversold area, below these levels. The target of this action will be the 618 retracement to the upside of the whole move down. That's, guys, the weekly butterfly brand by the buy, so the swings could be really significant and impressive from the daily time frame point of view. That is what object for our trading on the next week. I hope that this will be really interesting. So let's see what will happen, but in general this scenario is just a minor part of the larger patterns and larger situation combination of different patterns that are forming right now on the monthly and weekly time frame charts. That really could be thrilling in the medium term perspective, but on the coming week we will focus on this weekly brand body. In particular, we will waiting for resolving the situation with these reversal patterns. As soon as we will get the target been hit, we will try to take the long position with hope to get to ride on the weekly brand body buy pattern.